Hello, everyone, and welcome to the CFO Insider. My name is Amy Brownell, and every week on Tuesdays, I go live here on YouTube and Facebook to talk about all things CFO and advisory related. So today we are going to talk about the 3 financial statements that every single business owner needs. And if you're not providing these statements to your clients, you're really doing them a big disservice. So let's get into it. But before we get into it, I just want to say that I would love it if you would hit the subscribe button so you are made aware every time we go live and drop new content. And if you have any questions along the way, feel free to put those into the comment section or the chat. Even if it's after the session is live, I'll come back and I'll answer those so you have the answers that you need. All right, let's talk about this. So the 3 financial reports that every single business owner needs, they are the profit and loss statement, also known as the P&L, the balance sheet, and the statement of cash flows. So those are the 3 financial statements that everyone needs. And if you look at those in totality, it gives you a really great comprehensive view of the company's financial health, the performance, and the liquidity, how much money that business has, how much liquid cash. So they are interconnected. If we just start at the top and go through them, we've got the profit and loss statement, income statement, P&L, all refer to the same thing. And the purpose of the P&L is to measure profitability over a certain period of time. So maybe it's over a month or over a quarter or over a year. So it's over a specific period of time. That is one of the key things about the P&L. It's over a specific period of time. Now, the formula for the profit and loss statement is revenue less expenses equals net income. Now, revenue is that top line number that happens at the cash register when someone's checking out. So it's the number of units sold multiplied by the price. So revenue, pretty easy to understand. You also have 2 kinds of expenses. You have what's called variable expenses and fixed expenses. We actually did a video on this not too long ago. So if you have questions about variable and fixed expenses, you can go back and take a look at that recent video. But variable expenses are the expenses that it takes to make the thing that you're selling. So let's just say that you're selling t-shirts. It is the cost of the cotton to make the shirt. It is the amount of money that we pay the sewers to make the shirt. It is the facility where those sewers sit. So anything related to the cost of actually making the item, that is considered variable. Considered fixed are things like rent and marketing and utilities. Expenses that are more, on average, don't fluctuate with the number of sales that we make. So those are fixed expenses. And net income is simply revenue minus all of your expenses. And that's how much money you make at the end of that period. All right. So the important thing to keep in mind with profit and loss statement, it measures the performance of a company, how well a company did, how well they performed against another period, whether that other period be a budget or a forecast or the same period last year. It can be any of those things. So that is what a profit and loss statement does. A balance sheet provides a snapshot of a company's financial position at any single point in time. So it tells you how much cash do you have in the bank right now? What is the value of all of your assets right now? What is the value of your debt right now? So how much money do you owe people? And we are taking that as a period in time, a moment in time. So remember, a P&L is over a period of time, and a balance sheet is a moment in time. Okay? And the formula for a balance sheet is quite simply assets equals liabilities plus shareholders' equity. Now let's break that down because that's a little confusing. So assets are the things that the company owns. So the cash in the bank, equipment, plant property, things like that. Things that the business owns, accounts receivable, so the money that is owed to them for services provided. Those are examples of assets. Liabilities are things that you owe. So you owe money to potentially other businesses in terms of AP, accounts payable. You owe money on loans, let's say. So if you have outstanding, let's say you bought a piece of equipment, that piece of equipment is an asset, but the debt on that, the loan, is a liability. Okay? And then shareholders' equity is basically the plug. So assets equals liability plus shareholders' equity. So that is a way to think of it. It's basically shareholders' equity. Think of it as the net worth of the owners of the business. So the important thing to keep in mind is at a specific moment in time. Now, the third statement, the third report, is the statement of cash flows. And what the statement of cash flow does is track the actual cash coming into the business and going out of the business over a period of time. So it tells you how much cash you have. Now, the formula is very simple. You have your beginning cash balance, so your cash balance at the beginning of the period. You add in all of the cash that's coming into the business from sales, from collecting accounts receivable, things like that, less cash going out of the business. So things that you're paying, your monthly bills, your debt payments, things like that, equals your ending cash. So your beginning cash plus cash in, less cash out, equals your ending cash. So that cash is at a moment or over a time period. So typically we do it like month to month or week to week. Often it's done in like a 13-week rolling cash flow. But that is the three financial statements. There are things that connect these three financial statements. So if you look at them in totality, you have a really, like I said at the top, a really good idea of what is happening within the business from the terms of performance and liquidity, and what exactly is happening in terms of the financial health of the business. So those are the three key reports. If you're not getting those to your clients every single month, that is something you should be doing. And if you want to learn more about the 30 financial statements and how they benefit business owners and why you should be providing them and some explanations around them to your clients every month, I am holding a challenge. It's called Game Changer Challenge. It is going to happen this Saturday on, what is this Saturday? The 11th, April 11th. And during that challenge, I'm going to show you exactly what CFO and advisory services are. I'm going to show you how to deliver them efficiently, and I'm going to show you how to get clients. So it will be a fun session on Saturday. The link is down below. It is gamechangerchallenge.com/register one day. And you can find that down below in the description of this video. And that is all I have for you. I had a really good time today. I hope you did. Like I said, if you have questions or comments, feel free to leave them in the comment section. You can enter them into the chat. Otherwise, I will see you, as always, next Tuesday at 1 o'clock Eastern, 10 a.m. Pacific for another episode of the CFO Insider.